Monday the 27th of September, and I'm recording this video. I recorded one on Friday for subscribers and all those in the chat room. This one won't be a lot different, but I'm recording it for the new subscribers and new people following on the free trial of the chat room. So we're going to start off with the US dollar. Now you can see the US dollar index actually performed more strongly than I expected on Friday. I thought that this doji at the 23.6% fib indicated that the dollar was going to turn around and sink, especially if we just got overbought in what is clearly a bear trend. However, that was not to be the case, and we bounced back. Now, I'm not too concerned yet, because more importantly, we've got this huge trend line going all the way back to 2014. So this is a good 6 years old, this trend line. It is very important, and we are just kissing it now, and I'm not surprised to see that happen. The value of the trend line is around 94.75. We got to 94.75. So we've hit it and halted. Now, admittedly, we didn't drop back from that point on Friday. So if you're short, you might be feeling a little bit uncomfortable. But let's see if that does hold, and let's see if we do turn around. In the short term, we're overbought, so there is a chance that this will happen. One or two of the dollar pair charts look a little bit more in our favour. I like the way the Aussie dollar has held the 100-day moving average perfectly. The blue line there, as you can see, obviously this is in a bull trend, having had a small correction, holding just above the 23.6% fib also, which is around 69.70, 69.60, just holding well above there, obviously. We haven't quite got there yet. On the weekly chart, we have broken below this trend line. So this trend line is quite significant. It goes back to probably 2014 as well, does it? Yeah, it does, 2014. So obviously we'll need to recover above that quite quickly. Now that value is at 70.70. So we're going to need a 40 pip rally quite early on in the week for us to have held above that trend line. So we'll see where we go. There is quite a lot of support anyway on this Aussie dollar, because you've got something decent around 69.70, 69.60, and then you've got the 500-day moving average at around 69, just above 69.00, and we're obviously oversold in a bull trend, so I have to favour a recovery. One thing I forgot to mention on that Aussie dollar chart is that we retested Thursday's low on Friday, so we have actually got a double bottom also in that Aussie chart, which is quite positive. New Zealand chart, we got this decent shooting star candle on Thursday. So on Friday we had a little bit of a rally, couldn't be sustained. We couldn't get above this little trend line, having held more importantly, the 500, the green one, and the 100-day moving averages we did hold. Now we just need to get above the 65, this little trend line here. It's only, 3 months old, at 65.60, 65.70. If we can hold above there, this looks good. But as long as we hold above 65, sort of 65.25, 65.05, then this looks pretty good for the New Zealand dollar. Again, oversold in a bull trend. So I favour moves to the upside here. US dollar versus the Canadian dollar, clearly in a bear trend, and we've had a decent bounce back in that bear trend to the 23.6% fib at around 133.90. This is where I was suggesting to sell into shorts. We've got a very small double top there too. Probably easier to see these double tops on the hourly chart, actually. They look a bit more impressive on the hourly chart. There you go. That looks pretty impressive for a double top pattern. So I favour a weaker dollar here as well. And we have got short in that. If you're not short, then you might want to be selling it up around 133.90, 134.00 with a stop above 134.20. And we're looking for that. It's not quite a tweezers top, but you can see we have got longer upper wicks than we've had in recent days. And then obviously holding the green 500-day moving average as well. There's a lot going on up there. Even the 100-day moving average, which is sinking towards that level. So I favour this overbought situation triggering losses in the US dollar versus Canadian dollar. So as I say, selling up to around 134.00 if you get the chance. Gold is another one. We got a fairly bullish candle on Thursday as we bounced off the 100-day moving average. So that looks encouraging for the bulls. We're just heading into oversold territory, which isn't something we do very often in gold. We haven't been this oversold since March, and obviously we got a decent bounce from there on. So I'm wondering if that will be repeated here. As I say, decent positive candle here on the 100-day moving average, showing that there are buyers coming in. And then we've got this inside day on Friday, which is more neutral than certainly negative. So I'm hoping that that indicates that the market is at least stabilizing. We've also got the 23.6% fib on the weekly chart, which is 1857. So where did we get to? 1847, just a little blip below there, but we did close the week above that. So to me, this looks good for gold. Do we have a double bottom? No, we don't have a double bottom in this one, do we? Because we didn't quite test Thursday's low on Friday. But gold looks pretty positive to me. And for some confirmation, we've got a really bullish looking candle here in silver on Thursday as we bounce right off that 100-day moving average. A little pause on Friday, but certainly nothing to negate that positive candle. So this shooting star indicates to me that silver's bottomed in oversold conditions in the bull trend and that silver's going to rally. So that just helps to confirm to me that gold also should see some strength. So I think it is worth betting on a weaker dollar on Monday if you get the chance. If the market's open unchanged, or maybe the dollar has a little bit of strength on Sunday night, Monday morning, let's have a little go. Put some small positions on. Let's just see if they materialise. We don't have to dive in. There'll be plenty of time to add to those positions, and Sunday night's bound to be thin, so we don't want to go overboard on this. Now, the only sort of spanner in the works is the euro dollar on Friday didn't look as strong as I thought it would. We got a fairly bullish candle here on Thursday, but that was negated by Friday's negative price action, almost an engulfing candle, in fact. We are very oversold, so I'm not panicking yet. I'm still going to give the bulls a chance. But as you can see on the daily chart, there isn't really much support. There's a little bit of support on the shorter term chart, but I'm more content with the fact that we're just holding above this trend line here. This trend line probably goes back to 2014 as well. No, it goes back even further. This is a big trend line going all the way back to 2008. So this is mega important, as you can see. Probably easier if I look at it on the monthly chart. So we are approaching very good support in the euro. You absolutely have to take this trend line very seriously. We've only just broken above it when you look at it on a monthly basis, and we've dipped back to retest it. So let's see if that holds, and then this could be a really big move on the upside for the euro and on the downside for the US dollar. When you look at it on this monthly chart, it really does indicate that we could be about to absolutely roar. US stock markets, I did predict this on Friday very simply because we had a moderate, more of a neutral candle on Friday, but we bounced off the 100-day moving average very convincingly. So I suggested buying into longs on any dip towards that. We got close. 32.07 was the low on Friday, so we certainly had a decent buying opportunity. If you jumped into longs there, well done. Nice bullish candle. We closed above the previous day's high, which was 32.68 on Thursday, closed well above there. So I think that we should be looking to buy into any weakness, maybe around 32.60, 32.50. If you got a chance to retest anywhere around where these lows are, 32.18 down to 32.00, it's got to be worth a punt. Now, you know, if we do break the 100-day moving average and we close below 32.00, we'll have to review that and probably be jumping into a short position. But look how oversold we are. Don't forget, the stock markets are still in very long-term bull trends, and the idea is that you buy into support in a bull market. So, pretty textbook. We do need to recover quite quickly at the beginning of the week because we have potentially negative bearish engulfing candle on the monthly chart. So the bulls will definitely want to push this higher before the end of September, but not too concerned about that right now. We've got a very minor barrier coming up, 32.90. You can see that's where we got to. That's the first 23.6% fib on the continuation chart for the S&P. So for the bulls, if we're lucky, we'll just retreat back down to those levels that I gave you. And I don't think we'll see 32.20, 32.00 again, to be quite honest with you. But if we do, I would be looking for a potential double bottom. Obviously, if we break higher, especially if we get up through 33.15, this is going to be very positive on the hourly chart. We'll have beaten the 200-hour moving average, so that would look good. If we dip, 32.60 is the 100-hour moving average, so maybe be buying it around 32.60, 32.50. See, yeah, at least start to buy there. If you think we can dip down as far as 32.20, 32.00, then you can add and obviously break below 31.90. We need to be out and then reviewing the situation and probably switching into short positions. Now the Nasdaq, I was also suggesting that we buy into longs after we tested this trend line down here around 10,650, and we did bounce off it very nicely on Friday, so that worked well. I'm hoping that you guys who were listening to me did jump into a long. I also really like this double bottom pattern here that we had, probably a little bit clearer again on the hourly chart. Let me show that to you. There we go, nice double bottom on the hourly chart. The hourly chart looks really good. We've got the 100-hour moving average turning more positive. We've already beaten the 23.6% fib at just over under 11,100. The 200-hour moving average we've beaten as well. Won't be long before the 100-hour crosses over the 200-hour for a confirmed buy signal. This all looks pretty good to me for stock markets. Double bottom, fairly bullish candles, follow through. We didn't even get to the 100-day moving average. The bulls couldn't wait to jump into this one. So, yeah, for stock markets, we look pretty good, and we've got an oversold situation to work out. As I say, being oversold in a bull trend gives us more reason to jump into stocks. So, I think you get the picture. I would be buying into any weakness in the stock market, or I'd be buying into any breaks above Friday's high. Looks pretty good. Dollar, I do think, will go lower. So, if we do get any strength in the dollar, it's probably worth selling it. I've given you the levels for the Canadian dollar, the Aussie dollar, the New Zealand dollar, the euro. We'll see if it bounces off that trend line, but we can all have a chat about it in the chat room on Monday morning.